Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, the first thing I want to do is zoom out and just kind of review where we've been, and then we'll talk about where we're going. 1340 quarter, we get started. We gap up first of the year. We do a 38% retracement here to the 1553 area. We then bounce, try a double top, make new highs at 1705. Do a sloppy 23% retracement down to 1624, and now we've come back up to make new highs. So when you zoom out on the chart, it's just an uptrend. People can call it what they want, and they can say it's Bernanke, and it is. I mean, it's the Fed. The Fed wants it up, and they're going to buy things forever. And yesterday, pretty much what you heard is that they're going to buy stuff. They're going to keep doing this in perpetuity. You know, the taper's off the table. The flip side of that is if he's not Fed chair and things somehow change, one day, I don't know, maybe our children's children will wake up and suddenly they'll turn off the water, and that will be a huge shock to the market. But that's not happening today. It's not happening next month. I don't think it's not happening this year. So you've gotten that uncertainty out of the way. The market thinks the uncertainty is out of the way with respect to the Fed chair. Personally, I think the more people that tell the president that he needs to make Janet Yellen the Fed chair, the less likely it is he makes Janet Yellen the Fed chair. He's not going to want to look like he did what everybody told him to do. That's not him. That is not him. So I'd like to see the Fed chair issue get resolved. That said, we are in quite an up spike. So where do we go from here? I think we need to test 1705. We need to test that long-term swing high and see if it's real. Europe bought it, and we're going to gap up, which is not unusual. The gap from today, I would expect to fill the gap back down into the 1719 area, probably in the morning. I think you're going to see some panic. Panic's a strong word. Some panic selling into the open. You'll get a pop, and then then things will start to sell off a little bit. The question becomes what happens in the afternoon. Do the bulls come in and buy the dip off of whatever low we get and push it to new highs? If they do, then you have the danger of another Bollinger ride type of trend up day. That's absolutely on the table. The one thing that gets me a little bit more bearish than I normally am was the fact that we had sustained ticks above 1,000 for 20 minutes yesterday with little down ticks maybe to 800. That's a lot of big movement in the market for a long time. And to me, my interpretation of that is, a change in positions by some pretty big fish, the kind of fish that can't turn on a dime. And when they do turn, it churns up a lot of water. And when you see ticks above 1,200, 13, 14, 1,500 for a sustained period of time, those types of traders and funds and money are churning up a lot of water. Okay, and they're not buying. Okay, so that gets my antenna up as far as at least going back and seeing 1705. Okay, everybody have a fantastic day. Follow us at Princeton Trader. We had some technical difficulties yesterday. We had to move the webinar to this coming Wednesday, the 25th. So if you already signed up and you can't make it, that's okay because you'll get the recording. If you haven't signed up yet, sign up. We're going to do it the 25th at 4:30, and hope to see everybody there. Check out the website. Check out the subscription service. Check out the chat room. If it hadn't been a Fed day, it would have been a heck of a day. And we had the lows yesterday on the lower vol, 1693.25, and the levels have been working really well lately. And you can only get those if you subscribe. And they are for the ES and for 17 markets. So come check them out for a couple of weeks and see if they work for you. Have a fantastic day. I'll be back tomorrow morning with another webcast. Trade them well.